topics and opinions expressed in the following show are solely those of the hosts and their guests and not those of W4CY Radio, its employees, or affiliates. We make no recommendations or endorsements for radio show programs, services, or products mentioned on air or on our web. No liability, explicit or implied, shall be extended to W4CY Radio or its employees or affiliates. Any questions or comments should be directed to those show hosts. Thank you for choosing W4CY Radio.
Barry G. Fowler, EA, brings you Tax Talk for You right here on W4CY Radio and Talk4 TV. As an enrolled agent and a national leader in tax resolution, as well as trucker, bookkeeping, and tax planning with over 30 years of experience, Barry will break down taxes, bookkeeping, tax planning, and tax relief for individuals and businesses just like you. So let's have some Tax Talk for You with your host, Barry G. Fowler.
Hey, welcome, man. It is a great Monday morning. We had a nice long weekend and everything. My daughter's graduation from Texas Tech University, summa cum laude in animal science from Texas Tech, Davis College of Agricultural and Animal Science and stuff. It was fantastic, and then we get to, drive back towards Houston. We live out in Hempstead area. But we're driving her back with all her stuff and her boyfriend's stuff to bring my daughter back to College Station, actually, because she's going to start in College Station for veterinarian school at Texas A&M. So I guess we're going from guns up and wreck 'em to gig 'em Aggies. So it's gonna be a great year for her, and I guess 4 more years of college education to become a vet. She spent 3 years at Texas Tech, and us driving 7+ hours to see her, or her getting her home. To getting down to about a 45-minute drive. So, man, we're happy. I guess the Aggies say, whoop. I mean, I guess that's what we get to say is, whoop. I mean, we got a short drive. And my oldest son, who graduated from A&M, would be very happy that I was actually supporting A&M now. Even though for the last 3 years, we've been guns up and wreck 'em. So, great time here in the Fowler family. But what we're here talking about today is something that is a question that gets asked a lot of us. And that is, I owe the IRS, what can they take? And more importantly, maybe what can't they take? Or how do I avoid it? And so we're talking about levies. And, levies, when the IRS is taking what you have to pay your tax debt. And so first off, let's talk about avoiding them. What you want to do is avoid it. And you, as a taxpayer who owes the IRS money that they are coming after, and they're sending you letter after letter after letter, and then they send you a letter that they're going to levy you, to avoid it. First, you as a taxpayer, you got to have all your tax returns filed. So, that's the first thing, is go through and make sure that every single year is actually filed. SFRs, may be considered filed, but doesn't make the return right. SFRs are substitute for returns. It's what the IRS files on your behalf. Now, does that mean they're actually taking every deduction? Does that mean they're finding every business expense when you're in business? Absolutely no. They're not that generous. They're not that nice. Remember, they're the largest, biggest, baddest collection agency in the whole wide world, in my opinion. So you need to go through and make sure you've got all your tax returns filed, and then stay current. And then you're going to have to, at some point, supply all your financial information. Now, staying current means making sure you got the current year taxes filed, you're making sure you're making your estimated tax payments as required. And then, when you're working with a revenue officer or us, we're going to need financial information to get you the best deal that you possibly can when you're going to try to put a payment plan to avoid these levies. Now, a couple things that you can do to avoid a levy is you can actually request a collection due process hearing when you get your notice, the final notice of intent to levy. Now, if you remember the letter LT11 or letter 1058, those are going to make it your best opportunity to actually settle the case and make a deal, because you're going to request a collection due process hearing, CDP hearing, to get the IRS cooperation and your cooperation to work together to get you due process and get you the best payment plan that is allowed by law or non-collectible status. Now, if you're too late to file for that CDP hearing, then you got to cooperate with your revenue officer, RO. And you got to meet all of their requirements. They're going to give you a whole bunch of requirements that you need to file. So they're going to give you a form that says, hey, this is the information that we need from you. And it starts with bank statements, of course. If you're in business, profit and loss, your financial statements, your balance sheet, you're going to have to go through and give them all that information so that they can make a determination how much money you can afford to pay. They make the determination on how much money you can afford to pay. Does that make sense to you? Well, it makes sense to them. And what you can afford to pay and what they think you can afford to pay are going to be probably polar opposites. Meaning they're going to look at it and go, wow, you make this kind of money, you can afford to pay $2,000 a month on your tax debt. And you go, whoa, wait a minute. I can only afford to pay $100 a month. No, sir. You're going to pay the $2,000. So you got to learn to work within their rules, their regulations, and then prove to them that you can only afford to pay so much a month. And then you've got to look at how they're calculating what you can afford to pay to help determine what makes sense to you. Now, you're going to go through, you're going to request an installment agreement. Maybe you'll file for an offer in compromise. Both of those can stop levies. And then it allows you time to look at all your other options. Now here at Taxation Solutions, Tax Relief, when we're looking at avoiding levies, we're looking at the reason for what you owe. I mean, is it just you didn't file your tax returns? Somebody filed your tax returns wrong. You just didn't have the money to pay. You got audited. These are all things that happen as part of life. And then now all of a sudden you owe the IRS money. If you got audited and you lost the audit, maybe you didn't provide any information, maybe it was a correspondence audit and you weren't getting them information. You couldn't get somebody to respond to you. Nobody would talk to you. It was almost like you were working with a machine, not a human being, not somebody that could, reason and talk with you, and you lose the audit. So maybe we need to go through a complete audit reconsideration to stop the levies and get the IRS to look at your tax return again and get it to make sense. And maybe we can win the audit, and then the debt goes away, and then you don't have a problem anymore. Or we reduce the debt and something you can afford to pay. These are options. Putting you into non-collectible status. You can't afford to pay a dime. Your money that comes in doesn't allow you to do it. Maybe we can get you into non-collectible status and then stop all the levies on you as well. Maybe we can go in and get penalty abatements and get some of this reduced and get the penalties gone so that, we can keep you from having to go through these levies and reducing the amount you owe to maybe reducing the payment plan that they're going to put you on as well. So there are many options we have in tax resolution to save you from these levies that the IRS can place on you, where they're taking, pretty much everything that you own. So if you need to stop a levy, you need to call us at Taxation Solutions to stop the levies, wage garnishments, liens, back taxes. Whether it's against you personally or your business, you need the tax relief, and you need somebody to step in for you aggressively to stop the IRS. So call us today at 888-930-1016. Again, 888-930-1016. Now, we're going to talk about what's exempt from levies right after this quick break.
We have only scratched the surface of today's show. Please stand by, as Barry G. Fowler will be right back with Tax Talk for You. If you owe the IRS or are going through an IRS audit, don't go at it alone. Call Taxation Solutions Tax Relief at 888-930-1016. We are your solution for IRS debts, audits, back taxes, garnishments, liens, and levies. Whether you're an individual or business, you need a solution and a strong, aggressive tax resolution. Don't let the IRS walk all over you. Stop the IRS now. Call 888-930-1016 or go to taxationsolutions.net now for a free, no obligation consultation. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Hey, welcome back. We talk about helping people with their taxes and helping people fight the IRS and stop the IRS from taking what they have. That does, start with phone calls to us at Taxation Solutions at the 888-930-1016. And we can stop the IRS. A lot of times, if you have been levied, let's say your bank account's been levied, and you need that money to make payroll, you need that money to pay your house and your mortgage and your rent or car payments and stuff like that, and we can prove to the IRS we can sometimes get that money back as long as it's within a reasonable period of time. And usually that's within that 20, 30 days. So if you did get levied right away, we need to stop them and the IRS from collecting from your bank and get that money put back into your account. It's bad enough you're going to get hit with the bank fees on top of what they've levied from you. So, the idea is to get it back as quick as possible. Now, are certain things that are exempt that you don't have to worry about. And some of these are kind of funny, and, things like you're wearing apparel and your school books. So if you got books in your house that are technical books for school, they can become school books. If you need these books for, let's say, auto repair, your Chilton Guide, or books for your business, whatever business you're in, can be considered school books, and those are exempt from a levy. You really want to see a great website for things that the IRS has taken. You can actually go to the U.S. Department of Revenue's website and look at auctions. They have houses, lands, businesses. One of the funny ones I thought was interesting was a business license. So somebody in the state of New York was licensed for alcohol, and their license was up for auction. Evidently, those are worth quite a bit in the state of New York. So it was just kind of interesting to see some of the things that are there. I mean, jewelry and stuff like that. But, you're wearing apparel. I've never seen clothes there. I've never seen school books up for auction there as well. But other things that are exempt is fuel, provisions, furniture, personal effects that don't exceed $10,810. Now that's being adjusted for inflation in 2026, but that's the value that they're allowing you to have. Well, fuel prices at this price, if you got a big old tank out by your house, you might hit that $10,000 today. But remember, our fuel prices are still cheaper right now than they were about 3 years ago. So we have at least that to say for it. Maybe the prices will come down here shortly as well. Books, tools of a trade, business, or profession, those you can keep not subject to levy as long as they're less than $5,400. In 2025, that'll be adjusted a little bit for inflation in 2026. So, things like that are exempt. Now, also exempt, any mail that hasn't been delivered. So they can't go raid the post office. So if it hasn't been delivered, those are exempt from the levy. Judgments for support of minor children. So this is a required judgment by court, not your judgment, not in my judgment, but a judgment of a court. And that judgment would have to be entered prior to the date of the levy. So those are the things that you would have exempt from a levy. And then the amount of salary, wages, or other income as necessary to comply with such judgment is exempt. So if you have a judgment against you to support your minor children, then your salaries and wages or other income that's coming in that allows you to comply with that judgment would be exempt. Now, that does not mean after you pay all your other bills that this amount is exempt. It's the first dollars. So if you're ordered to pay $1,000 a month, well, $1,000 of your pay is exempt. And then they figure out the rest that you can keep from there. Now, the IRS has special formulas on that, so you can go through and look at their formulas. So that minimum that the IRS, is what they're going to figure on your salaries and wages or other income. So that exempt amount means basically an amount equal to the sum of the standard deduction and the aggregate amount of the deductions for personal exemptions allowed the taxpayer in the taxable year in which the levy occurs, divided by 52. So they're going to give you that standard deduction. So you'd have to look at how you're filing: married filing joint, married filing separate, single, had a household. You get that standard deduction for the year divided by 52. Now, if you're getting any other personal exemptions in there, they're going to add those in as well, and then divide that by 52, and then allow you to have that money out of your paycheck, plus the amount of money that you would have for the previous talked about judgments against you. So your employer gets to figure that out, and then you would probably have to prove to your employer the judgment amount as well and provide that to your employer. Now, a lot of times when you are paying child support, they send it to your employer and it comes out of your check and then directly to there. See, it's kind of one of those things. Government Big Brother feels the same way about tax money as they do about judgments against you, that you won't pay it unless somebody else does it for you. They feel the same way about income taxes. You're not going to pay it unless your employer pulls it out and gives it to who? Big Brother, the federal government. So, again, those exemptions and those judgments can be used. If it's not being pulled from your paycheck and you're paying that judgment out personally, then you need to provide the amount to the employer and proof of the judgment so that they can properly figure how much money Big Brother is going to allow you to keep and how much Big Brother is going to take for your tax debt. That's how that levy is going to work. So again, you as a taxpayer have to submit a written and verified statement specifying the facts necessary to determine the proper amount, and therefore your employer can apply it to you. So makes it a little bit difficult, but it is the way the rules are written and the way the rules will work. Now, property. So if you have a residence with a small deficiency, that means under 5,000, they're not going to make you get rid of that. You have real property that's used as a residence by the taxpayer. You're probably going to get to keep it. Any other real property of the taxpayer. So if you own any other property, and it's used by you as an individual residence or part-time residence, you might be able to keep it, but you've got to be using it. Now, if you have real property that's being rented or as investment, you're not going to get to keep it. Now, your principal residence is usually exempt, but if you have a huge amount of equity, we're going to talk about what the IRS can ask you to do for that equity in your home when you owe them a bunch of money. And we're going to do that right after this quick break.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for You. As an owner-operator, you already spend too much time away from your family. Trucker Tax Tools handles all your bookkeeping and taxes no matter what level trucker you are. Life on the road can be taxing, but that doesn't mean that your wallet or time with your family should suffer. Trucker Tax Tools makes your life run smoothly. Go to truckertaxtools.com for a free guide that will give you the tools to never worry about your taxes again. Call Trucker Tax Tools at 877-966-2477 or go to truckertaxtools.com now and let the experts keep you trucking. Let's get back to Tax Talk for You with more Tax Talk. Once again, here's your host, Barry G. Fowler.
Well, welcome back. We're talking about your personal residence, your principal residence, and you have a lot of equity in that. house. What's the IRS going to be looking at doing? Well, one, the IRS may be looking at still seizing that property or making you sell that property to access that equity. But most likely they're going to ask you to go get a loan on that property. And, it may be a home equity line of credit, or maybe a HELOC loan, or maybe you don't have a mortgage on it, and they tell you to go get a mortgage on that property to pay them the money that you owe them. And actually, it may not be a reasonable ask, because it may give you a much lower interest rate than what you're going to pay the IRS. And so it may be reasonable to do that. Plus, they're looking at it that you took all the money that you owe them, poured it into your residence, and that's why you don't owe as much, or you don't owe. And it could be just simply the property values have skyrocketed from when you first bought it, and and now you have a lot of equity out there. So maybe you can access that equity to pay them down. Okay. That's usually what they're going to ask you to do. If you get denials, now a lot of times they ask for 3 different denials from 3 different banks, so that you can prove that there is no way you could access this, and there's no way you can get a loan on this. And a lot of times when you owe as much money to the IRS that they're asking you to do this, it generally means your credit is probably poor anyway, and it's going to be very difficult to do. So they're going to look at those terms as well. Something that's really kind of exempt, and it could be your tangible personal property or real property. They could be looking at those things to take, but if it's used in your trade or business, or is rented out, and you need that income coming in, and it has a positive cash flow to you, then you might be able to keep that property to help pay the taxes. Because, if maybe selling that property that's being rented and has income coming to you could prove to the IRS that gives you the wherewithal to make the payments. So maybe we'd be able to avoid the levy on that and the taking of the property to sell. So we have a lot of different options out there. We just got to weigh the options to determine what is right for you. But the best thing to do is to stop the IRS from taking anything, and finding the right solution to the problem. Now, if you're doing an offer in compromise and you have tangible personal property, or real property that has value with it, the IRS, as part of that offer, is going to use it as part of the amount that you're going to pay them. So that it will increase or change your offer as you go, based on this personal property, and especially if you've got equity in home, business property, even rental property. All that stuff is going to be used to determine what you can pay to the IRS. Now, in order for the IRS to seize your principal residence, IRC code, Internal Revenue Code, section 6334 says these are the prerequisites. All required notices had to have been issued to you. Does it mean you had to open them? Did it mean you have to know what they meant? Zip, zero, nada, nada. No, it does not. It just means they had to be sent to the last known address. If you didn't provide a change of address and they sent it to an old address, sorry about that. If they send it to an old address, it's still considered constructively received, and therefore notice has been issued to you. If you did not pick up that certified letter from the post office, it is still considered received by you. IRS has done their job per the Internal Revenue Code. All consideration has been given to every alternative collection option. So basically, they had to give you an option for a payment plan, an option to get loans, and any option that is available that you would qualify for, including offers in compromise, non-collectible status, even a partial pay installment agreement, if you qualify. They also have to provide evidence to assure that economic hardship, health issues, offers in compromise on based on public policy considerations, and other matters have all been taken into account. And they're going to have to provide evidence that the sale will be economical. So is it economical for the IRS to go through all this process to get this property and take it from you to be able to sell it and then get enough money off of it to pay some of the debt? Now, your liability also has to be greater than a whopping $5,000. Not 10, not 20, not 30, not 50, 5. I don't know how this makes sense economically, but 5,000. Then it's not up to the revenue officer. It's not up to the revenue officer manager or the revenue officer's manager's manager. It is actually up to IRS counsel. And only they can approve the proposed seizure of the property, and then they refer it over to the Department of Justice for filing the action. So it is a long and hard process. That's why I'm really surprised that they have this $5,000 minimum that they could actually seize property for. Kind of crazy. You would think it would be that 100,000, 200,000, or $1 million and above. They're going to go after seizing property where it makes economical sense, and 5,000 to me does not make economical sense because it's going to cost us taxpayers, not the IRS, not anybody else, but us taxpayers who foot the bill, more than probably $5,000 to not only have a revenue officer document everything, get everything, approval through the managers, and then send it to counsel to sit down and go through and review this whole thing to make sure that they've done all the prerequisites and met every single Internal Revenue Code section before they approve the proposed seizure, and then send it from counsel to the Department of Justice, who then again has to go through all the paperwork, make sure that everything makes sense, and then file the filing at the United States District Court. And then after months of sitting in court and going through and reviewing, and then if you have a lawyer who can work with you in the United States District Court, who delays the proceedings, 6, 9, 12 months later, the court then issues the written order to seize your property, and then becomes property of the United States government, who will sell it. Yes, they'll pay off your lien when they sell it if there's a lien on the property. The proceeds will go to pay off your debt. They consider basically fire sale value 80%. If they get that 80% and pays off your mortgage and has some money left over to pay on your debt, they will pay on your debt. If it is more money than your debt is, they will actually pay you back because they receive more than the debt and expenses was. And then you would receive whatever's left over from there. Generally, nothing. Generally, you still owe. They did not take this and automatically use it to write off 100% of your tax debt. No. They took this property applied what they make off the sale, what they receive off the sale, less the expenses of the sale, less the expenses of the court, and generally you're still owing them money. But they feel happy and satisfied because what did they do? They made your life miserable. They just took your property and sold it right out from underneath you. So sometimes it's better to work with the revenue officer, put it up for sale yourself, and you'll maybe get more money to apply than the government is going to apply on your account. So things you've got to look at and try to work through. Boy, I told you this IRS is one of the toughest and biggest, baddest revenue collection agencies, debt collection in the whole wide world. They do have power. Yeah, they have prerequisites to go through. Yeah, they've got a step-by-step they've got to go through. And if they miss a step and it's caught by counsel, it gets referred back and they've got to go through and redo and fix those steps. If they miss the steps and it's been, and the counsel didn't catch it and Department of Justice didn't catch it and it's in district court and your lawyer catches it, guess what? It would get kicked back to that revenue officer and they would have to go through all the steps to make sure that they've done everything correctly before they, again, get counsel referral to court. Now, there might be a little bit more hesitant and they will do a lot more double checking and everything to make sure that they have covered all their bases. So what about your business assets? Assets of your business. You know, a lot of times the IRS does want to keep you in business. And sometimes the IRS just doesn't give a rat's behind about you or your business, and they want to put you out of business. And they're going to find a way to levy against your business or close your business and take whatever assets that you have to pay off your tax debt. You know, the whole goal of the IRS is collecting money. It's not to keep you in business. It's not to allow you to live. It's not to do anything other than collect. Yeah, they talk a good game with Fresh Start. They talk a good game about, hey, this gets you back a good, compliant taxpayer. Yes, ma'am, I am going to pay my taxes. Yes, sir, I am going to give you everything that I have and everything that I own. That's compliance. It's actually paying the minimum amount that you actually can, paying the minimum of taxes that allowed by law as you can go. That's, to me, compliance. Hey, we're going to talk about levying bank business accounts and business assets, what they can and can't do against your business. And we're going to do that right after this break.
We have only scratched the surface of today's show. Please stand by as Barry G. Fowler will be right back with Tax Talk for you. As an owner-operator, you already spend too much time away from your family. Stop spending time doing paperwork. Go to truckertaxtools.com, a solution built specifically for truckers. Truckertaxtools.com makes your life run smoothly. Let's get back to Tax Talk for you with more Tax Talk. Once again, here's your host, Barry G. Fowler.
All right, we're talking about business assets here for a minute. You own a business and your business has tax debt. You know, whether you're at 1120, whether you owe payroll taxes, whether you owe penalties for filing late, the IRS can levy you. So, you know, what the IRS is concerned with is whether or not the collection of tax is going to be in jeopardy. So if they allow you to be in business and you continue to be out of compliance, you don't file your 941s on time, you don't pay your 941 taxes on time, and you continue to do this and you're just a repeat offender, the IRS doesn't really care and they figure, that by leaving you in business jeopardy, they are in jeopardy of collecting tax dollars from you. So all you're doing is robbing them to pay your employees. They are not looking at it that, hey, I can leave you in business and you're going to pay your debt. You have proved one iota that you can make a single tax payment to the IRS because you haven't done it since they've been working with you. They are in jeopardy of any collections whatsoever. So a district director or assistant director can approve in writing the levy against you and your business. So that is what they're going to do. I've seen it. They went and not just levied against the bank account, and this business didn't have a lot of assets, but it did have people who issued them 1099s every year, and they went directly to their source of income and levied against their source of income, effectively put them out of business. So any money that was owed to that company or individual who was doing the work for them would never be received as long as that levy is in place. It is continuous. So if XYZ company, you work for ABC goes to pay you, when you do the invoice, the levy's there that send the money to where? The IRS. Not to you, directly to the IRS. You again work for them and you send them your invoice. They go to pay you. Nope, that levy's there. You just worked for free. The money went to the IRS. You have got to now find a way to get that levy released that is sent to that company so that you can go back to work to start having money coming in. But you're going to have to prove to them you are going to be in compliance, making your estimated tax payments, making your payroll tax payments, and doing this timely. That is what they're looking for. That is what they're expecting. So it takes a lot of work. So if your business is faced with this levy, you need to get tax relief, tax help, tax resolution, and get this out of the way. Best place to call us at Taxation Solutions, 888-930. Man, I had 1016. Again, 888-930-1016. Man, I almost lost that right off the top of my head and brain there today. So, you need to stop these levies. Now, I got a question from Jane. Can they take my wages? Okay, we talked about that earlier. Yes. Any compensation for services, whether it's fees, commissions, bonuses, salary, those are continuing levies until that levy is released and the IRS can take it. Now, there is an exempt amount. We talked about that in one of the earlier sections of this radio program, and you can go back and listen to the podcast at taxtalk4u.com and see the podcast over there once we put it up, and be able to go back and listen how they figure your wage levy out there. But it is actually continuing wage levy. That is per section 6331E. So that is in the Internal Revenue Code. It's also in the Treasury Regulations, section 301.6331A1. A levy on salary and wages extends only to the property possessed and obligations which exist at the time of the levy. obligations exist when the liability of the obligator is fixed and determinable, although the right to receive payment thereof is deferred until a later date. Both salary or wages earned but not yet paid at the time of levy, advances on salary or wages made subsequent to the date of levy, salary or wages earned and becoming payable subsequent to the date of levy until released. The other way your levy gets released is your CSEDs run out, statutes of limitations. So your levy can go as long as your statute of limitations. So, you got to remember that, if you've got 10-year statute of limitations, that wage levy can be there for 10 years. If you're only down to 2 years or 1 year, it's then, that 1 or 2 years. I see a lot of people that once they get a wage levy, they are now running from one company to another company until the IRS finds them over there. Sometimes it takes them a year to find them. So, maybe you can run and hide. It's not the way I recommend that you're going to deal with this. It's kind of like sticking your head in the sand and hoping for the best. No, it isn't going to work. Your pocket is still in the air if your head's in the sand, and the IRS is going to pick your pocket and take what you have, one way or the other. Sometimes it's levying on your bank accounts, and sometimes it's levying your wages. They can even levy against Social Security. Ouch. They're evil. So you got to remember that part as well. They can attach up to 15% of some payments that are due to you. So any federal payment other than a payment for income or assets, unemployment benefits, workers' compensation, public assistance payments, and any annuity or pension under the Railroad Retirement Act or benefit of the Railroad Retirement Act. You can also have continuing levies like we talked about on Social Security and retirement benefits, your federal salaries and wages, federal retirement annuities, vendor payments from federal contracts. Hey, if you're a doctor's office and you are getting Medicare or Medicaid, they can take 100% of what you're going to get from Medicare and Medicaid. Yes, they can. They can levy against your military retirement pay. All those things can be levied. Now, there are certain things that it doesn't include: supplemental security income, certain veterans benefits, federal housing assistance, and temporary assistance for needy families would not be included. Boy, a lot of information in a short time. Man, I love this program, but sometimes it just goes so fast. And, we keep talking about these levies. I've got several questions of, hey, how many times can they levy my bank account? They can levy your bank account as often as that revenue officer sees fit. So they may do it now. They may do it in a month. They may do it in 6 months. You've got to stop this revenue officer from doing that by working with them, working with us at Taxation Solutions. Call us today, 888-930-1016. Again, 888-930-1016. Make sure you mention that you heard it here on Tax Talk for You so we can get you special discounts and help you immediately. Like I said, program goes fast. We have a lot of fun here. If you got questions about the IRS levy or they're levying you, again, give us a call. Don't forget, we're here every Monday at 10 a.m. Eastern Time at Tax Talk for You. We're going to talk about things that are good for you in your business, whether you're a small business, consulting, any kind of business that you have out there, truckers, or even if you owe personal tax debt. We're going to talk about solutions for you to save you from the IRS. But the first thing you've got to do is tune in here at Tax Talk for You every Monday at 10 a.m. Eastern Time on W4CY Radio. If you're not here, you can't get help. if you're here, that's what we're here to provide, is to get you information to do that. Now, have a God-blessed and glorious week. We'll see you here Monday next week, 10 a.m. Eastern Time on W4CY Radio. Find us at taxtalk4u.com. Follow us over there so you never miss an episode. Have a God-blessed week, and we'll see you next week.
Are you an individual or business that wants to understand taxes and how they affect you? Are you looking for specific tax advice for self-employed, business owners, and truckers? Are you behind on taxes and your bookkeeping? Are you dealing with the IRS and ready to have some relief? Then you need Tax Talk for You, hosted by tax and trucker expert Barry G. Fowler, EA. Tune in 10 a.m. Eastern Time every Monday right here on W4CY Radio and Talk4 TV. Don't forget to check this and past episodes at taxtalk4u.com. See you next week at W4CY.com.